Good morning. Welcome to IG's early morning call. It is the 28th of February 2024. It's a Wednesday. Let's take a look at the headlines as we wait the start of today's European session, which looking as though it's going to be a mixed start to the trading day across the European markets. But in amongst the headlines, we've seen some unusual activity around the New Zealand dollar. It's down against all major currencies after the Reserve Bank of New Zealand took the market by surprise with a dovish outlook after its interest rate meeting, further reducing the risk of further tightening in what has otherwise been a cycle where expectations have been high, another possible interest rate rise. As we look towards the start of today's UK equity market, we got some numbers out this morning from Reckitt, from Taylor Wimpey, and Halfords, all looking very negative. Aston Martin Lagonda not looking too bad on its full year figures out this morning. And late last night, we saw eBay shares up 4%. The e-commerce giant's fourth quarter numbers showing that gross merchandise volume unexpectedly rose over the last 3 months of its reporting period. Record high on the German DAX. We've got money going into risk assets. Look at the volatility on the way down again today as we see investors and traders look out some opportunities for the market, which is really where I want to start, because as of the last 15-20 minutes, we've seen another new all-time intraday record high on the 24-hour markets on the German DAX, pushing up again amidst what continues to be a really poor outlook for the economy in Germany. Big gains in yesterday's session, closing at a new all-time record high. 24-hour markets intraday yesterday is a new 24-hour market high. And again, as I said, another new one up on the session this morning. An index that is looking somewhat less than happy is the FTSE 100. Yesterday, we saw a long-legged doji candle. A long-legged doji means that markets start and end pretty much where they were at the same time. And that means that people were undecided as the next move in the market. Today, very similar sort of price action, hovering around the 76.80 level. As I said, we've got a really split view on some of the earnings out this morning. Most of them are negative. A couple of them are positive. I'll go through those in just a few moments' time. French CAC 40, not too far away from the record highs we saw in the last few days or so. I think it's Friday last week. We saw record highs 79.78, currently trading 79.44. So you can see we're just 30 points down from that record high. Looking now as though we could well see a little bit of a negative start to the trading day at the moment on the French CAC 40. Let's take a look at what's been happening overall on the Asia-Pacific markets. Hong Kong's Hang Seng Stock Index stealing the headlines today, down 1.5%. The economy, which expanded 2.3% in 2023, expected to grow 2.5% to 3.5% this year. Its financial secretary in Hong Kong announcing measures to support the economy, particularly its property market. You might remember that Hong Kong's house markets have plunged. The prices have plunged 20% since their 2021 peak. Some analysts expect a further 10% drop this year. So some support coming through for the Hang Seng. Despite that, the market's in today's session down 1.5%. S&P ASX 200 and the Nikkei 225 both mixed. Let's take a look at what's been happening in the US markets as of yesterday's close. The Dow Industrials was on the way down by a margin of 0.25%, but gains on the S&P 500, gains on the Nasdaq Composite. I want to start off by showing you what's been happening with a stock of interest in the markets as of yesterday's close. We saw the markets for Apple responding to reports. It's an interesting news headline yesterday. Apple was on the way up by a margin of 1.1%. According to sources, Apple has cancelled work on its electric car. Several employees working on the electric car project will be shifted to Apple's AI division, according to Bloomberg. Apple has declined to comment on this, but it saw a positive swing to extended trade late last night. I saw that market move up on the Nasdaq yesterday. We've got a little bit of a red candle today, not too far away from recent record highs. That drop on the Dow, further on down today on the 24-hour markets, fourth day in a row of declines now at 38,915. Let's pick up on that move in the Kiwi, the RBNZ, the Reserve Bank of New Zealand, maintaining its official cash rate at 5.5%. But under the covers, we saw some interesting commentary, the decision in line. But all but one economist polled by Reuters, in a statement, the RBNZ reiterated that it needs to keep policy restrictive for a while in order to bring inflation down below its 1 to 3% target band. But there was some interesting trades for the Kiwi. Look at this chart here. This is the New Zealand dollar against the US dollar. We've not seen the upside move for the US dollar, so it's really all been about what's happening with the central bank. More dovish outlook than some had anticipated, according to one economist, sending the Kiwi dollar down across the board. That was against the US dollar. This is against the Australian dollar. We normally look at Aussie against the Kiwi, but I've turned it around just for the effect of showing you the negativity it's given for the Kiwi. Recently, we've seen the Kiwi trade at multi-year highs. In fact, this is the highest point we had actually since May 2023, not multi-year, multi-month highs, I should say. The RBNZ now forecasts the cash rate peak to 5.6% from the previous projection of 5.7%, reducing the risk of further tightening in the market, which is why we've seen a short trade for the Kiwi win out. Meanwhile, in Australia, we've seen consumer prices come through, and that was a little bit further on down than had been expected as well, showing there's now little evidence to suggest that the Australian interest rate picture will rise. Let's take a look at the numbers. Monthly CPI rising at an annual pace of 3.4% in January, unchanged from December, and under market forecasts at 3.6%. The latest inflation data reinforces the market opinion that interest rates in Australia would not need to rise any further. Meanwhile, in Europe, not much expected overall on the macroeconomic front. At 10 o'clock this morning, I just want to highlight one piece of information. We're expecting Eurozone economic sentiment expected to marginally rise to 96.7 in February from 96.2 in the previous month. Meanwhile, the currency market could well see some moves potentially today in the US. The second estimate of GDP in the fourth quarter is due. Economists forecast the economy to have expanded 3.3% in the October to December quarter. And at 3 p.m., we've got wholesale inventories expected to rise by a margin of 0.2% in January month on month. So let's take a look at what's happening with the euro dollar. Down for a second day in a row, and now down below the 200-day moving average. Reckitt Benckiser heads us off in the direction of corporate news headlines out this morning. Revenue dropping by 2.4% in the fourth quarter, missing expectations. The group attributed the decline to the performance of seasonal profits down because cold and flu remedies haven't been moving off the shelves as the company had expected. Let's take a look at the figures. For the full year, revenue is up 3.5%. Operating profit fell 1.9%. Adjusted operating margin dropped 70 basis points to 23.1%. All that would appear to be negative for the stock potentially at the start of today's trade. Despite that, in the last couple of days, we've seen the stock price chart peak at levels not seen since the 25th of October. I guess on hopes that these numbers out today would prove better than expected, but that's not been the case. And I'm wondering whether perhaps maybe a short trade might win out today. 58.47 is where we're opening. If you do have a short trade in place, your stop goes above the 59 level with a view to taking it down to some of the recent levels of support. There'd be a price target at 56.70. Meanwhile, Taylor Wimpey coming through with numbers which pretty much expected to be pretty poor, but oh boy, were they on the way down. Revenue down 20.5% year on year to 3.5 billion. Operating profit falling 49.1% to 470.2 million. Dividend up 1.9%, but I've no idea why that's the case, because average selling prices have not been rising as much as had been expected. They were up 5.1%. Net cash down 21.5%. In terms of the share price move, I think it's worth looking at this in the context of the last couple of days where the Competition and Markets Authority has started a new investigation into house builders generally under the Competition Act 1998. The CMA has come through with the big question mark as to whether or not there's been collusion in pricing and collusion in the release of house building land to the frontline house builders within these companies. In other words, have the companies conspired to keep the price of houses up by restricting supply more than the government wants? Second day in a row of declines yesterday. I can't see anything in this news out today suggesting that Taylor Wimpey is in a better position than it has been in the last couple of days. I want to stay on the charts, just quickly wrap through some of the other companies worth looking at. Halfords up recently, but I have no idea why, because the trading statement for the full year is really poor. Material weakening in three core markets, cycling, retail, motoring, and consumer tyres, resulting in what the company says is a significant drop in like-for-like revenue growth in the retail business. They now expect pre-tax profit to fall between the range of 35 to 40 million for the full year. That was down from the previous estimate at 48 to 53 million. Driven by two key areas, cycling and retail motoring, both underperforming the general market. So where do we go from here? The stock will open at 200.6. I suspect we could well see some relatively significant declines. Where do we go? The next big line in the sand is the 190 level, down to below this candle here. 165 would be the price target, I guess, if you're short on this. If you're short at 200, your stop goes above the 210 pence level, with a view to taking it down at the start of today's session. One of the companies I think worth looking at in terms of positivity is Aston Martin Lagonda. Revenue increasing 18% when we saw the release of the figures out this morning. Adjusted EBITDA rising by 61%. Loss before tax reduced to 239.8 million. The luxury car maker said it was on track to hit its 40% gross profit margin target later on this year. So it seems like people have money for luxury cars, but not for bikes. This is the share price chart. This blue dotted line up here is the IPO price that when the company came to the market back in April 2021, and the company's up along the bottom. Result in yesterday's session, MACD pointing up. Good numbers out this morning. Possibly we could well see this company approach the £2 mark again. 176 is where that stock opened at the start of today's session. Let's take a look at Currys. As another stock worth looking at this morning. Currys set a new one-year high yesterday after it said it rejected a new £757 million bid from Elliott Advisors. This was the second approach from Elliott, coming in at 67 pence. The stock traded as of yesterday's close at 66.4. China-based online giant JD.com has said it's also considering an offer for Currys, but yet to show its cards. So these companies have until the 16th of March as a deadline and takeover regulations for making a firm offer for Currys, or now they're going to walk away. Some breaking news coming through from Just Eat Takeaway as well. Look out for that stock at the start of the day's trade. The food delivery firm posting an adjusted EBITDA of 324 million euros for 2023 compared to 19 million in the previous year. Despite this, revenue fell 7% to 5.17 billion. The long-term chart, JustEatTakeaway.com, has been well trodden. Massive value destruction at one point trading at 70 euros. This will open this morning at 12 euros 84. Let's take a look at what happened late last night. eBay shares jumping as much as 4.5% in yesterday's session. In fact, it was up 10% at one point yesterday, an extended trade on the IG platform, ending up just 4.2% on the back of better than anticipated earnings. Healthy consumer spending during the holiday season was behind this, according to the company. Let's take a look at those figures. Reported an adjusted operating profit per share of $1.07 compared with estimates of $1.03. Revenues of 2.56 billion. We've been looking for 2.5 billion, the number for eBay. So that was better than expected. Quick snapshot of where we ended up in the session yesterday. This is an stocks. You can see quite clearly here the movement that we had for the business, particularly supported by its US customers. eBay flagged weakness in the UK and Germany. US earnings today, a couple of familiar out with numbers later on today. Salesforce is forecast to post earnings of $2.27 per share and revenues of 9.22 billion. Snowflake, ticker symbol SNOW, fourth quarter EPS seen at 18 cents and revenue of 761 million. A couple of stocks worth watching there. Let's move on to commodities. There's some interesting commodity stock stories out recently. I want to begin first of all there with oil. Yesterday evening, API said that crude oil stocks rose 8.4 billion barrels last week. Both gasoline and distillate stockpiles fell by 3.3 million, 500,000 barrels respectively. This had little or no impact on the price of oil. I think one of the headlines, though, for me, for the price of oil, let's take a look at US crude. Today said for a third day in a row. Yesterday afternoon, 3 OPEC Plus sources told Reuters the organization will consider extending the voluntary oil output cuts in the second quarter. Additional support for the market. Staying on the charts, just want to update you as well on the price of gold, down for a third day in a row. But for me, one of the big commodity stories is this rise in the price of cotton. As of the start of today's trade, we're up again today at a one-year high for the biggest we've seen in a long while, 101.52. There are reports that there are supply concerns for the price of cotton. That's it from me. Back at 10:30 with Charting Markets. Do watch out for those European stocks at the start today. I suggest potentially there could be some interesting shorting positions or possible for some of these stocks here in the London markets. I'm concerned about the earnings outlook. One of them is Taylor Wimpey. The other is Halfords. Possibly, could we see a gain? What's the gain for Aston Martin Lagonda?